Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and global markets. I'm your host, Louis, and I'm excited to have you join us today. We're starting off with some big news from the world of trade and tariffs. Yesterday, U.S. President Donald Trump announced a tariff deal with Japan, which has sent shockwaves through financial markets around the globe. The agreement will see Japanese imports to the U.S. incur a 15% tariff, down from the threatened 25% level that had been looming over the industry. Now let's break it down. This deal is being seen as a significant win for both sides, with Japan avoiding the higher tariffs that could have had a devastating impact on its automotive and manufacturing sector. And for the U.S., it's a victory in terms of opening up the Japanese market to American products, such as cars, trucks, rice, and agricultural goods. The reaction from financial markets has been overwhelmingly positive, with share prices surging in Tokyo and European markets following suit. The Nikkei index jumped 3.5%, with Toyota shares leading the charge, up over 14%. And here in the US, we're expecting more gains when the markets open later today. Now, it's worth noting that this deal is not without its critics. Some argue that the tariffs are still too high and will ultimately be passed on to consumers. Others are concerned about the impact on other trading partners, particularly those who have not yet reached a deal with the U.S. But for now, it seems that investors are betting on the idea that this deal could be a precursor to further progress in trade negotiations between the U.S. and other major economies, including the UAE. The question is, will this momentum continue, or will we see more twists and turns in the world of trade and tariffs? We'll be keeping a close eye on developments and bringing you all the latest analysis and insights here on the Riskwiser Zone. So, stay tuned for more on this story and other news from the world of finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and risk management. In this segment, we'll be discussing a couple of stories that caught our attention in the market today. First off, let's talk about AIDailyPress Technology, a drone maker that's been making headlines lately. The company recently reported its Q1 results, and unfortunately, it was a disappointing quarter for them. They posted a net loss of Rs 23.5 crore, compared to a net profit of Rs 1.1 crore in the same period last year. Their revenue from operations also took a hit, plummeting 85% year-on-year to Rs 12.7 crore. Now, it's worth noting that this is the fourth consecutive loss-making quarter for AIDailyPress, which might be causing some concern among investors. The stock price has already taken a hit, falling over 7% to Rs 506.2 on the BSEA. However, the company's CEO, Ankit Mehta, remains optimistic, citing a recent defense order worth Rs 137 crore that they secured under the center's fifth cycle of emergency procurement. Mehta expects this order to start reflecting in their revenue over the next 2-3 quarters, and is also hopeful about the government's increased focus on indigenous defense production, driving future growth. It's interesting to see how the company plans to turn things around, especially with the proposed rollout of the next phase of the PLI scheme, which could be a major catalyst for the sector. On the other hand, we have to consider the views of analysts, who have given AIDailyPress a consensus rating of sell, with an average target price of Rs 388, implying a 24% downside from current level. It's clear that there are differing opinions on the company's prospects, and only time will tell how things play out. Moving on to another story, we're seeing some interesting developments in the bond market, particularly with regards to corporate bonds. The recent rate cuts by the RBI have led to a surge in demand for corporate bonds, with many companies looking to raise funds at lower interest rates. This could be a great opportunity for investors to diversify their portfolios and earn higher yields. However, as always, it's essential to exercise caution and carefully evaluate the credit risks involved. We'll be keeping a close eye on this space and providing you with updates and insights to help you make informed decisions. That's all for this segment of the Riskwiser Zone. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's episode with a comprehensive market analysis from renowned expert Chakri Lokaipriya. Let's dive right into it. As we've been discussing throughout the show, the current market landscape is filled with uncertainties, and investors are keenly watching every move. According to Chakri Lokaipriya, the wires and cables segment is closely tied to the overall economic revival, and companies like Polycab are waiting for clarity on tariffs before firming up their demand. The pharmaceutical sector has been underperforming lately, with the exception of a few select CDMO players and small to mid-cap names. Chakri attributes this to the ongoing tariff overhang, which is causing volatility and uncertainty across various sectors. However, he notes that the actual impact on companies like Dr. Reddy's may be lower than feared, making any weakness in the pharma sector a potential buying opportunity. In the IT space, Wipro has been a bright spot with strong deal wins and an encouraging outlook. Chakri is cautiously optimistic about Infosys, expecting them to hold on to margins as expected, but notes that deal pipeline conversion is unlikely to improve significantly. Lastly, let's talk about SPI's recent KIP, which has raised Yotto 25,000 crore in capital. Chakri believes this move will increase SPI's weightage during MSI and FTSE rebalancing and make the bank's book value more attractive. With its NPAs under control and a strong Tier I capital position, Chakri predicts that SPI stock could rise another 20-30% from current level. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.